it's blown my mind over the last handful of years as we've started to focus in on this tax thing, people's lack of understanding of the different types of accounts that they have, how they're taxed, how it's different, and how it actually hits their 1040.
What's the number one secret to, creating like a forward-thinking tax flow money spending plan?
I think I could answer that a lot of ways, but I think the most practical way to answer that question is that the only way to get out of the bill is to commit a felony. And so as long as the client understands that it's not about, ridding yourself of taxes, but minimizing them, that's the first real thing that people I believe need to understand is like, look, we can try to minimize their impact, but at the end of the day, the law is the law. My job isn't to abate the law. My job is to weave you through the tax code in the most efficient way possible. Sometimes that means that we're purposely bringing taxes into your life now so that we don't have to have them later. And other times that means we are not only putting legal structures in place for generational type tax planning, but we're purposely kicking the can down the road. Both of them can make sense. It just depends on what your situation is.
Got it. So the first secret is making sure you're staying legal, right? You're not going outside the bounds, but you're using every available tax deferral or a minimization or perhaps just paying taxes if they're a little bit lower now, if it makes sense, or you have maybe some harvesting to be able to do, right?
Yeah.
Is that a fair summary so far?
Yeah, absolutely.
Okay, excellent. And so number two, what's the next secret or step, or how are you guys aiding and helping future clients to do this?
I think two things. One, building out kind of a lifetime tax pro forma for them and not looking at it on a year over year basis. Anytime you get into the micro and you lose picture of, you're looking at the tree and not the forest, you can make decisions that feel really good today from a tax perspective, but are building a big problem for you down the line. And so that's the first thing. The second thing would just helping them understand the impact of their pile of money or whatever assets it is that they have, and how they're actually taxed. It's blown my mind over the last handful of years as we've started to focus in on this tax thing, people's lack of understanding of the different types of accounts that they have, how they're taxed, how it's different, and how it actually hits their 1040.
Mm-hmm. Okay, so let's dive into the lifetime tax pro forma. I love that. I have a commercial real estate background. We're always underwriting, looking at pro forma, and we do the same thing with our tax strategy as far as deferring capital gains tax. We're looking at the pros and the cons, the ROI. So break down that lifetime tax pro forma, and then also throw in one of the biggest maybe pitfalls that people they think they should do it, but you're like, actually, if you look at the forest from the trees, right, we would do it differently.
Well, obviously, this show, capital gains tax, is talking about one side of the tax code. A lot of the people that we deal with are living their life on both sides, right? They not only have capital gains that they need to be concerned with, or at least educated on, maybe not concerned. After they talk to us, hopefully they're not concerned anymore and they have a plan. But the ordinary income tax side, these people also have, retirement accounts, qualified accounts, as we call them, 401ks, IRAs, things of that nature. And so just looking at what they owe the IRS, where are you sitting on? So if you've got $1 million or $5 million sitting in deferred accounts, and you've got another 2 million sitting in a non-qualified account, or 15 million sitting in a non-qualified account, and understanding what cost basis is and what's sitting there, and getting an idea of what you owe the IRS as of today. And now that we know the playing field and basically the bill that you have, how can we mitigate that bill? Should we be stretching it out? Should we be pushing some of it forward, pushing some of it out? And some of that has to do with what they want with their pile of money. I mean, some people, when they look at their nest egg, or kind of what their estate, if you will, it's all about them. They want that for themselves in their lifetime, and other people don't. Other people, that's all about their kids, or if we're just being honest, it's really about the grandkids these days. And how do we get it into their hands and build some sort of generational legacy? The advice is going to be completely different. That true north, as it were, and that long-term pro forma is going to be dependent on the client's response to, well, what do you want to do with your pile of money? And then based on that, we can kind of build out a plan from a tax perspective of how to get to the most efficient outcome as possible.
Perfect. That makes sense.